Well, good morning, expats. Thank you for tuning in for another episode of Expat Mortgages. My name's Jeremy Harper. I have a special guest here today, dialing all the way in from WA, from Perth. I have Artie from Folk Buyers Agency. How you going, Artie?
Good, good. Good morning. How are you?
Very well, thank you.
It's good. Thanks for having me.
Not a problem. So second time round?
Exactly. Yes, yeah. I was quite looking forward to this one because since last time, a lot of things have changed and the market has been um, as chaotic and as interesting as we expected it to be. So yeah, looking forward to discussing that further.
Yes. So we're going to do a deep dive around Perth and WA specifically today for our listeners, our expats. We've got a lot of expats up in Singapore and Hong Kong and Dubai that are always keen to get back in or in the Perth market. But firstly, let's talk a little bit about Folk Buyers Agency, how it started and sort of, how your 2025 and 2026 been.
Absolutely. Yeah. So, of course, we started this company at the start of 2025, and I've got a fair bit of experience with one of Perth's top performing real estate sales teams in the western suburbs of Perth. And since then, I decided to start my own business or to represent the buyers, mainly because the market was getting more and more trickier. And much difficult for, I guess, the buyers to really negotiate the right outcome. So since then, we started a full service buyers advocacy, and we basically look after a lot of investors and owner occupiers all around Perth, around Australia, and a fair few expats as well.
Yeah, fantastic. And I think what's relevant for expats, and we'll get to how hotly contested a lot of properties are in Perth just because of the market there. But for the expats out there that are looking to engage in someone like yourself and your services, giving expats obviously that negotiation, the research, but access to off market, allowing your customers and clients to get access to some of these properties before they hit the market, I think is very, very relevant to expats. So, for those that are looking to move quickly and get themselves access to something that maybe others don't have access to.
Absolutely. And even in this market, we've been getting a lot of off markets and pre-market opportunities, and it all comes down to, I guess, our relationships with a lot of agents and potential sellers within the market. And there's a lot of reasons why they come to us. And yeah, we are securing, I would say, half of our sort of deals off market or pre-market. I was just actually looking at a couple of off markets yesterday for one of my clients. So they are definitely possible, but you have to do a lot of more due diligence with off market specifically and make sure it's the right property for your client.
Yep. Yep. And in terms of, with your clients, are you seeing a mix of just local, so you like looking after predominantly people within the state, or you looking after, I know you've got some expat clients, but interstate as well, is that still quite popular?
Yes, absolutely. I think more and more people are seeing value in investing Perth and even Brisbane for that matter. Few people that we had with earlier this year were actually moving from Sydney and one from Melbourne, sort of locating to Perth.
Yep.
So basically one occupier, but they were interested. So we sort of were helping them out with all the due diligence, and we've got, of course, feet on the ground so we can do all the inspections, home opens, and all the rest of it. And then, of course, guide them through the negotiation side of things. So good mix of clients. A lot of investors still see a lot of, I guess, potential in Perth market. And of course, it all comes down to the growth that we've seen, what we are seeing in near future, and also the rental yields and a few other components as well.
Yeah, fantastic. And so we'll just look at the Perth market at the moment in terms of a bit of a state of play for April 2026. I know, you're on the show last season. Perth was running hot. Now, as we look at it, the median house price of Perth has cracked $1 million.
Yes, yeah, and I think it's happened for the first time,
Yeah,
and we are not seeing any signs of it slowing down. And yeah, it has been quite a ride for last 2-3 years, and yeah, I think from the last data that we got, I think it was just around 1.008 or something like that, which is almost 20% annual growth. So yeah, it's going quite well.
that's quite remarkable. And if you look at the growth in units versus houses up, throughout 2025, I think units were up about 18% and 12% for houses. So, even the units, huge demand there.
Absolutely. I think we're seeing that more from, I guess, last 12 months because the house prices have gotten in the brackets that a lot of people may now look at units because they are more affordable. So I guess the affordability is driving the prices up in the units. So yes, yeah, we will probably see and experience the same thing for 2026 as well.
Yeah. And in terms of the selling or sort of median selling time, so let's calculate December 2025, took 9 days, which is incredibly fast. I think that's 7 days faster than the same time the year before. Um, and that probably feeds into what you're saying about getting those off-market properties and getting that access because it's so hotly contested, these properties are moving very, very quickly.
Absolutely. And we're seeing, let's say this at the start of this year, it's even quicker because let's say they usually release the properties, for example, on market on Wednesday or Thursday. They've got home open Saturday and Sunday. Uh, Usually people have to put an offer by Sunday or Monday sort of afternoon, and it's gone under offer on Monday or Tuesday. So basically not even a week anymore. And yeah, they're going and snapped up quite quickly. Just reiterating the, I guess, importance of having someone by your side to have that access and negotiate in a very efficient manner because
Yeah.
yes, the market is um, quite sales driven at the moment.
And on that, what are you seeing from a financing point of view? So obviously you're recommending get the pre-approval first so that you're in a really good position. Are vendors open to taking a finance clause? Is that changing at all, the terms around that?
Yeah, definitely. So we always recommend our clients to get the pre-approval done. Then only we sort of start looking very actively because we know we have to be ready when the opportunity comes. And it definitely helps us to, I guess, negotiate better. In terms of the sellers, they are very hesitant on taking on subject to sale offers. Subject to finance is still the most common one.
Yeah.
However, if you are in a position or if your client is in a position to not have subject to finance clause, that's when you can definitely get even better deal, even in this market. So you can play with the terms and, you can negotiate harder. But yes, having finance pre-approved before you start looking is definitely an essential in this market.
Yeah. And no, I think that ties in with the vacancy rate. So 0.6%. So I think it's about the tightest in the country. Incredibly hotly contested. And okay,
Absolutely.
so maybe we'll just do a bit of a jump into some of the suburbs that you've seen that perform well over the last 12 months.
Hmm.
You've got some,
Yeah. So Uh, look, there is, of course, as everyone understands, there's market within the markets,
yeah,
and a lot of suburbs have performed quite significantly well in last year. Most of them about 20%, the ones that I'm going to talk about, and also there's significant amount of suburbs that have been sort of in that mid-10 range, depending on the strategy, how long you want to hold the asset, etc., etc. We sort of look at the data. But let's say Armadale, surprisingly, because it had already seen a lot of growth from back in 2020 to 2025, it still got 23.7% annual growth at a
yeah,
median price of 853. There's Belmont or Vic Park, really good restaurants there, close to airport. Um, that's grown around 22%. There's other suburbs sort of close to 20% growth annually. Gosnells, Kwinana, Swan. Wanneroo is one of the suburbs that we also invest fair bit because it's a very good potential growth area, proximity to coast and Joondalup area as well. Mentioning of Joondalup, it has also grown 18.7% in last year.
Yep.
Which offers, so it's basically considered a second CBD sort of because they've got a good hospital, coastal lifestyle, the service centers and things like that as well. So, Coburn, which is south of the river, has seen significant growth as 18.7%, but you'll see the median price over there is now over $1 million now. So you'll see a less, I guess, interest from the investors because there is a lot of other markets that are available with similar potential growth, but at a much lower median price.
Yep. Okay. And so I've got some questions around that. So the the demand, so from your buyers, are they still looking at outer suburbs in general, or are they kind of looking back towards that inner to the middle ring suburbs?
Yeah, I think with Perth, the good thing is um, people are not really attached to the CBD as such. Of
Yeah.
course, there is like hubs and a lot of employment and things like that. But from the lifestyle point of view, people from Perth, they do like a bit of space, proximity to the coast and things like that. So not necessarily people are sort of looking just within the proximity of CBD, but we're seeing a lot of northern suburbs, let's say Kimos, Eglinton, growing quite significantly. As I mentioned, Joondalup, Wanneroo, sort of that side as well, also south of the river. So yeah, again, not within sort of very close proximity of the city, but also it's because the price point, right? So
Yeah.
within 10 kilometers or 15 kilometers of the city, they're not as affordable as they used to be. So people have to really move out a little bit to sort of afford a good land size as well. So it's both lifestyle factors and the affordability factors. So if you look at sort of within 10-kilometer region of Perth, it's really hard to find a decent house under 850, for example.
Yeah.
So most of the first home buyers, they'll be pushed out in the outer region anyway.
Makes sense. Okay. And so in terms of your, a little bit of a prediction, suburbs that you're recommending for your investor clients right now, may it be expat or, interstate investors or even local investors?
Yeah, absolutely. Look, there is different brackets, of course, different price points within sort of the investor markets and the owner occupiers. Anything sort of sub 1 million is still a very good potential within Perth market. We're seeing, I would say, Joondalup, Wanneroo, Alkimos, Eglinton, Bayswater, all of those sort of in the northern region. And then if we go south region, then there is of course, you've got Southern River, Vic Park, Coburn, Success, some part of Rockingham as well. So
Yep.
there is few areas that we see growing. Again, it all comes down to now the employment opportunities, and there is some hospital upgrades coming up as well. So yeah, there's few things happening within Perth market. So there's a northern sort of north of the river market, there is south of the river market, and yeah, there is a lot of opportunities under that 900 mark still.
Sure. And in terms of on the other side, like any areas looking a bit too hot that you'd want to stay away from?
I would say I would still not the areas in particular, but I would say the type of assets. I would still try to get, if I can, within my price point, get some land. So I would still try to buy a green title block with a home on it rather than buying a strata or service strata because of course that sort of adds on to the cost of holding the asset. And also we've seen that historically the houses have grown higher as compared to those other sort of type of assets. So I would still focus on, I guess, that land component, proximity to um, shopping centers and sports activities and things like that. And of course, good school zones are always in demand.
Yeah.
So we look at south of the river, there's sort of Riverwell and all the rest of them around sort of the university and good school zones. They are always good.
Yeah. Okay. And just changing tack slightly, we're talking about interest rates and affordability. Obviously, we've mentioned median house prices shot through that $1 million. So obviously you mentioned earlier that we're starting to see people being priced out of suburbs. Now we've got the rates going up. We've had the back-to-back hikes in February, March, cash rates at 4.1. We've got the variable rates for owner occupiers sitting at sort of high fives now, investors at that sort of 6%. Now we've just seen last fortnight, banks have increased their fixed rates. So now you're seeing 2-year fixed at, as of today, St. George, Westpac came out just this morning, the
Mm-hmm.
2nd of April, and they've increased their fixed rates again. So you're now seeing like 6.5% for a fixed loan. What's that doing
Wow.
to buyers on the ground over there? Do you feel like the buyers are sensitive to these rate rises, or is it more they're just sensitive to the price of these properties, or is it a combination?
Yes, I think the investors are sort of definitely feeling it, mainly because of what's been happening in the stock market. Number one, the
Yep.
war happening in the Middle East, the fuel prices and all the rest of it. So a lot of clients of ours that I speak with, of course, they have diversification within their sort of investment portfolio. So they have properties, they have stocks, they have few other sort of assets they invest in because they've seen such a dramatic, I guess, change into the other assets. I feel they are sort of feeling a bit of a pinch in terms of also investment in the real estate. Of course, there is a bit of an uncertainty of what's going on and where it will all lead to. However, in terms of the buyer sentiment, especially for the primary residences, um, I feel like one interest rate hasn't done as much of a damage, but if we are expecting, or you'll be the best person to answer that, if we are expecting one or two or even three further interest rate rises,
Yeah.
I guess it will go definitely worse. And then, yeah, people will definitely feel the pinch.
Yeah, I just can't help but think that there's so many things playing out that it feels like another version of COVID. Instead of people talking about the daily infection rates, people are now talking about the daily fuel price.
Hmm.
Where rates go will be interesting. I mean, I know that the banks are forecasting a couple more increases this year, and that probably will play out. But I'm putting my neck out here a little bit. I would not be surprised if we start to see, because the data will change, not necessarily inflation. I think inflation is going to be a challenge in our economy for at least 2 years now. That's,
Hmm.
look how long it took the inflation to get under control on the back of COVID. It took us many years. I think that will happen again here. And again, depends on how long this plays out in the Middle East. But
Hmm.
I wouldn't be surprised if, in the next 12 months, they do start to cut the rates, the RBA, because of what's happening in parts of the economy. The big difference, which I find really interesting, what that's going to do to property. So two things. One is the equity markets, particularly tech, has just been slammed over the last sort of
Yes.
6 months.
Hmm.
So what does that do to an investor's confidence that's exposed into those type of asset classes? And people who have property in, or money in property overseas. So I've got a lot of clients that have invested in, say, Dubai. What does that property market look like in 12 months' time?
Hmm.
And then on the back of that, when you cycle that money out, do they take that money out and does that come back into the Australian market? Because if you think about what's happening, really the only thing that's impacting, well, obviously inflation will for households of people that hold debt in Australia, and then interest rates is the big driver. So what does that do to Australian property? Do we then go on another cycle? Do we do another leg up if they start to cut rates and capital starts to come into the Australian market? Because the Australian property as a whole will start to look quite attractive for that capital. If you're taking that capital out of Dubai property and cycle it back
Hmm.
into Australia. So those sort of things that I'm seeing on my end.
Sure. Yeah, just to add on to that and going back to, I guess, your previous question about how I'm seeing sort of this market and the buyer's sentiment, what I'm seeing is more and more concentration of first home buyers, and also investors into sort of that price bracket of sub million or even sub 900.
Yeah.
What's happening is, of course, now everyone is competing in the same market. So affordability is now driving the performance. And just to add on to that, just within last quarter, as in last 3 months actually, the lower quarter of the Perth market, I would consider that as sub 900, has grown 8.4% just within 3 months. And just in Feb itself, I've got this data in front of me, it's 2.3% in 1 month.
Wow.
So you're looking at almost $20,000 increase in 1 month in your $900,000 investment property. And of course, a lot of people are competing, so that's driving the prices up. And again, it will be interesting to see how long sort of this lasts. But if I'm being completely honest, and I'm sort of out there in the market, I'm speaking with a lot of people, agents, a lot of buyers. I just don't see this slowing down anywhere in near future, at least for a year or so, specifically for Perth and Brisbane market. Because I know Sydney and Melbourne are seeing a bit of softening. I was just going through data and they were showing around actually the SQM research that came out in February actually. They had forecasted Perth growth to be sort of 10 to 13%, Brisbane to be 7 to 11, but then they had as Melbourne and Sydney into sort of that minus, as in the negative growth. So it will be interesting to see how sort of those market goes. So these are the major capital cities that we're seeing softening a little bit as compared to your, I guess, mid-sized capitals that are growing quite significantly. What are your thoughts on that?
Yeah, I think that definitely has merit. For Sydney, when the elevated interest rates, higher mortgages, higher average mortgage in, say, Sydney, then of course that borrower is going to feel that impact and that affordability much more than, say, someone that's in a smaller house and small mortgage in Adelaide or in Perth. So yep, definitely agree. Melbourne's going to continue to have its challenges on a state level, just the taxes that are there. It's not very investor friendly. It's not very sort of friendly to anyone that has wealth of any sort in that state at the moment. That may change. But I think people are watching that from afar. So yeah, I think people will continue to those two markets particularly Melbourne, may just struggle a little bit in the short term. If there's a change of government, that changes. And for Sydney, markets within markets, I was just at a client went to an auction on the weekend. It was guided at $4 million. Very nice blue chip location in Sydney. Went to the auction and it sold for $5.2 million. So the money's still there. Sydney will always have that capital. So it's definitely within, there's huge markets within that Sydney overall that will perform differently. But
Fair enough.
Good question. So I guess to round out our last topic before we've got a couple of user questions that have come through, you wanted to ask about potentially some of these capital gain changes and negative gearing?
Correct. Yeah, absolutely. I just wanted to understand from your point of view on the reforms or potential reforms coming in with the CGT and the negative gearing. What are your, I guess, thoughts, and what do you think it will happen?
Well, so it's all going to come down to the May budget. So as this government's done is they'll sort of drip feed some of this news through, and then they will get a bit of a temperature feel of, okay, we'll put these proposed changes through the media. How does the public take that? And then if they do, then they'll try and take that to the budget. And then from there, they'll try and put that through and pass that and legislate it. So as it stands, I mean, there's no policy that's been released. It's all a lot of just potentially this may happen. But I guess if we take a bit of a step back around the history of capital gains, it used to be, we used to have what you call the indexation rate that was available, where the government would release what the CPI was for the year, and then every year would index the cost base of that asset that you've got. So when you go to sell it in today's dollars, the cost base has been adjusted to reflect what that would be worth today. So if you had
Mm-hmm.
the asset for 10 years, you do a calculation. And what they did, they brought in the 50% discount back in the 90s because they realized that that calculation would vary every year because it was very hard. Those computers weren't around. So accountants quite often got that calculation wrong. So it wasn't very user friendly. Took a lot of time to calculate. So they said, okay, fine. What's the cost base? What do you sell it for? And if you had it for more than 12 months, we'll give you a 50% discount.
Mm-hmm.
Easy to calculate. Everyone understood. And so now it's become a bit of a political football where they're trying to say this is tied to housing affordability and that investors are utilizing this tax break, as they'd call it. But really what it's doing is it's just, yes, it's giving you a discount. So if you held an asset for 14 months and you sell it, you get a 50% discount on that gain. Versus if you had that asset for 15 years, you still get a
Mm-hmm.
50% discount. So I guess there's a bit of a blanket rule. So yes, it is correct that if you had an asset for a short period of time, that discount is going to have a much more greater impact on your I guess what your take home after tax gain is versus if you had it for a long period of time. So, but that's what these changes are in place. Now they're thinking potentially, I mean, I've heard ideas where they will remove it altogether. They will reduce it to 25%. They'll
Mm-hmm.
reduce it to 33%. I think it's just a watch and see what happens. It feels like when they started to try and push this through at the start of the year, there was a bit of momentum, but I've got
Mm-hmm.
a feeling the capital gains changes, the negative gearing changes, rates have since gone up, inflation's gone up. There's bigger issues to try and tackle. And I think for this budget, some of that will be pared back and maybe they'll look to next year's budget to try and push these through. So I don't know if they'll actually go ahead with some of those proposed changes this year, or if they do,
Sure.
it'll be a watered down version, and perhaps they'll grandfather the existing purchases. So if you've got an investment property before that date, you're not going to be impacted by these changes,
Mm.
and similar to negative gearing.
Yeah. Okay. I just feel it will be too drastic of a change
Yeah,
for the property market if they were to sort of get rid of it altogether, because it's hard to assume how the market will react, right? And it can be one way or the other in a significant way.
correct.
And if, from my understanding, let's say, as I speak with a lot of investors, if there was a change with CGT and if they were going to reduce it to, let's say, 33% or 25%, I just have a feeling they'll maybe hold it for longer.
Yeah,
In that case, it it will actually put a fuel on the fire in a way to the current market, because we are already struggling with the number of listings or number of properties on market for sale.
yep.
And then people will maybe just hold it for even longer because, they want to have more capital gains. Um, so I think it may not be an ideal scenario for the property market.
Exactly, exactly. And I think right now, with everything going on, does the government want to be inserting more uncertainty, big changes,
Exactly.
big changes? If you look at the value of real estate in this country, it is the number one asset. Do you really want to be going into this with what's happening with inflation, interest rates, and obviously the oil crisis from overseas? So, no, good question. So I've got two user questions that we'll just kind of fire through.
Hmm.
First one that's come through. So I'm an Australian expat. They're up in Singapore, so they're not too far from you. They want to buy a investment property in Perth. Where would you start, and what sort of questions would you want to start to work through with that expat up there?
Yeah, yeah, absolutely. I think um, the first would be the budget that we're looking at.
Yep.
Um, and then we can sort of filter out the markets within sort of Perth. Um, Also depends on the yield expectation. historically, of course, as we all know, Perth has very good rental yields on an average of 5.2% as compared to, let's say, around 3.5, 4% in the eastern coast. And of course, the holding period, which will also define how we see the capital growth in certain areas, whether they're good for 5 years, 10 years, and things like that. So I guess combination of budget, yield expectation, how long they're sort of hoping to hold it for. We not only focus on suburbs, but we focus on the strategy, and then we work the other way around, and then we sort of try to find the good areas depending on the brief.
Yep. Great answer. And another question, so probably goes back to what you're talking about. We've hit the $1 million club, but prices have risen so much. Have we missed the boat with Perth, or is there still value there?
No, I think there is still a lot of value. The median price is above 1 million, but there is still a lot of other suburbs that are significantly lower than that price bracket. So we're buying properties in the range of 750 to $1 million for most of our investors.
Yeah.
And there is still a lot of opportunities. And as mentioned at the start of the I guess our talk, that there is so many areas that have grown significantly in the 20 percentage plus, and we have a list of suburbs that we think are going to do just as good this year as well, and that are sort of in that sort of 800, 900 mark as well. So I don't think we missed the boat. There is still a lot of confidence in the market, not just from the interstate or expats, but also within the local community.
Yeah.
And there is a lot of gain to be had within sort of Perth market.
Yeah. Fantastic. Well, that's all the questions that have come through. But I just want to thank you for your time, Artie, and thank you for everyone listening. We'll have your contact details in the show notes. And if you've got any questions, shoot them through. We'll obviously have this post up on YouTube, and people can sort of come through to any specific questions they've got, or perhaps they want to chat to you if they've got existing property in Perth, and perhaps they want to look at getting a revaluation done, see what sort of equity they've got there. Can we go again? And maybe they're in that ability to actually leverage that property one. But thank you everyone for your time. Just a little bit of a shout out. We will be holding a masterclass later this month in Singapore. So look out for that on the Atlas Wealth Group socials. So if you are an expat and you are actually in Singapore, come along. I'd love to chat, maybe even talk about your next purchase in Perth, and seeing how we can make that happen. But for everyone else, thank you very much for your time. Artie, thank you very much again. And yeah, stay tuned for the next one.
Thank you so much, Jeremy. And yes, feel free to reach out to any of the listeners if there's any questions, anything you want help with in terms of the property in Perth market. Would love to help.
Fantastic.
Thank you.
Thank you.